going on, folks? It's Marcel, Boss Blunts. It's March 8th, 2022. And hanging out, enjoying, and watching the market right now. It's pretty bad, to say the least. So a little bit of a bounce on the SPY, but as you can see, it's pretty much all nonsense here. It's mostly oil, gas, XOM, Shell, BP. Hang on one second. If somebody's watching this, please turn off the screen. Thank you very much for muting it. We're hanging out in the think tank today. My little one's a little mad, apparently. What's going on, Diaz? Tyrese, TMI. What's up, Moises? Just hanging out. I don't finish my doobies before screen. I smoke before, during, and after. A lot of people don't seem to understand that. I'm not doing it for show. I'm just doing it because I like smoking. But hey, to each his own, right? Are we still gonna be fucking rich? What kind of nonsense question is that? Has your conviction waned already? Has your conviction waned? A couple weeks of waiting, and the hedge funds make people rethink their investments, because last time I checked, the due diligence hasn't changed. If anything, it's just gotten more in our favor. The short thesis is flawed. The short thesis is fucked. What's up, Greg? Carl, don't forget. Edward, Trenton. Appreciate you guys. Do me a favor, don't forget to drop a like if it's not too much of trouble. It doesn't cost you anything. But it does help get the stream out to new apes. So thank you for your support, your subscription, and for liking. Yeah, I just wanted to bring this up in case you guys are unaware. Diesel and jet fuel are absolutely skyrocketing. Some of you may know or may not know that I own a very small trucking and logistics company, and the cost of diesel is one of the main drivers of fuel surcharges, both at the ports, rail yards, and in trucking in general, no matter what size of the vehicle. My little one, or my younger daughters, I should say. So they're just asking to see if they can watch TV and get some ice cream. Sure, why not, right? And you guys, kids got early dismissal right now, or because that's it's kind of a pain in the ass. Let's say that much. I love my kids to death, but early dismissal in general is a pain in the ass. But yeah, taking a look at diesel, jet fuel, they're skyrocketing. This is NYMEX diesel futures. They're at their highest level on record. As you can see, the last time that they were at this level was 2008. Sorry about that. Let me switch up the screens here since it's behind the text. Is that better? I did get some ice cream, brother. Thank you. I told Nicky to go get it. I appreciate you guys. Good looking out. Definitely don't like to leave the kids hanging, you know. They're great kids. I'm lucky. I think most of us are. They're a lot better than I was at their age. So, Lord help me. The cost of trucking and receiving your goods, going to stores and shopping every day is going to be more expensive. Going to buy fuel is going to be more expensive. Not only the cost of the goods themselves, but the exponentially rising shipping costs and transportation, the trucking, the labor. There's a lot that goes into supply chain that most people don't understand. And that's okay, because not everybody's going to understand how a gallon of milk was processed, pasteurized, transported between farms or factories, shipped to distribution centers, then get sent outbound to your local stores, usually on LTL trucks to various hubs before it reaches an exclusive truck taking it to the nearby stores in your area. So there's a huge chain of events that has to happen before, this cup of coffee or, the gasoline in your tank, or the gallon of milk, or the carton of eggs sitting in your fridge. Look at the price of beef. I wouldn't say the stock market's fine again. I would just say that it's the beginning of something that most of you have never seen. We started calling out in the beginning of January that the stock market was crashing, and a lot of people didn't believe it. That's okay. We're not here to, force people or scare people into thinking anything. We just want to show them what's happening so far. And if you look at the S&P 500 index, the maximum intra-year drawdowns from 1928 through 2022, you can see pretty clearly what the fuck is going on here. When you got 2022, the year just started, and we're already got highs as low as lows as far as 12.5% down for an intra-year drawdown. 2008, we saw 48% drawdown. 2018, 19%. 2020, 33.9%. And the majority of this happened all at once in 2020 here as well. I will show you another one that I've got, though, that will give you a better explanation of the number of days that we've had percentage-wise. Let's take a look. But before we get there, here's another. I'm really glad I got those. I picked up some USO calls and some WTI calls on a couple of my different accounts. Naturally, Biden did go ahead and say that Russian oil was no longer going to be allowed to be exported or imported into the United States, and naturally it's going to send oil prices skyrocketing. Financing now available for fuel. Finance available. No credit, no problem. Does that look like a joke? As you would think that it might actually be a joke if you didn't know better. It's a pretty messed up situation we've got. You've got people needing to finance fuel to, for example, get to work. Uh, 10-year inflation expectations derived from inflation-linked bonds is now over 2.6%. So this is an all-time high, exceeding that of 2008 for inflation expectations. I'm not too worried about the price of oil dropping hard. If it does drop hard, and when you say drop hard, I'd like some real numbers, because that doesn't really mean anything. But when you look at oil, you know, it's still up 2.34%. You know, it's USO is down $2. That's really not saying a whole lot considering it's still up 32% on the month, you know, 73% on the last 6 months. So a $2 drop where the stock is still up 2.34% is not tanking. That is hardly what I would call tanking. Hopefully it does continue to drop because in my eyes, if energy tanks, oil, natural gas, and things like that tank, it is probably an indication of a stock market crash. And shorts will soon need to cover their short positions like CEI. Did anybody else jump into CEI yesterday or the day before? Because I've been having a ball with it. It was up 80% yesterday, 60% today, 100% over the last 5 days, 150% over the last month. Options are cheap, you know. They are volatile as hell though. It was up at $1.90 earlier today, and it's back down to $1.34. And I think I'm gonna hang on for a few more days because I have a feeling this bitch ain't done. What about you? Any of you guys jump in it?
Hey, boss, I will say that we have a propensity to gauge oil drops and spikes on just domestic oil, and we really need to unilaterally look at all worldwide oil. That's the play on whether we're going to be spiking hard or tanking, and that's also our outlier for the market condition. So that's all.
Yep, looking at WTI is down 5.3. Explain that a little more if you can, Silverback. I think people are very interested in what you said.
Well, so we have indices that are we have a way to gauge our domestic oil production, which we know is at an all-time low over the last, I don't know, 6, 8, 10 years anyway. And just because the United States domestic oil drops, it does not mean that the rest of the world is doing it. And we're only a fraction of what the entirety is on that.
For sure.
And on the energy. But we also know that historically, almost every single major correction, every time that the market comes down and does some type of a correction, it's usually led by energy. Energy is kind of like a harbinger. You know, I don't necessarily think that energy causes it. I just think that it happens to give us a really, really good indication that there's something volatile getting ready to happen. You know, the old saying is, as goes energy, so does the market. And I think that's a pretty valid statement.
Yeah, brother, I've been watching it over the last 5 days. If you superimpose or, you know, layer the S&P and oil, they seem to be running almost exactly inverse to each other at this moment, which I find to be very interesting. If you look at I look at oil on the 1 day, the 5 day, and the 1 month, the 1 week chart, and it seems to be running almost exactly opposite of the S&P. That's really kind of tweaking me out. This is the Shanghai from yesterday. It was down 5.39% at one point. How fucking nuts is that?
And I kind of mentioned the Nate chat earlier also. So I got a hold of a couple of guys that I've worked with in the past out in the oil field. One of them's in Permian Basin, the other is in the Eagle Ford shale beds, kind of in between Corpus and San Antonio. These are huge, huge oil fields, and they are having huge problems with logistics. Because if you think about it, the only pipelines they can utilize are what they call gathering pipelines. So that's your upstream and downstream pipelines are not delegated by Biden's crunch on oil. But the production is cut back, so they still use those. But the problem is getting stuff like pump parts, valving, stuff like that. Logistics is at a crawl with these guys, and they're hurting. So they're getting hit on a multi-directional level, and it's just going to get worse.
Yeah, I think you're right, and I think the rising costs of energy is the precursor to the market crash situation that is pretty much appearing to be an inevitability at this point.
You know, the other thing is most people don't realize this. All these interstate pipelines, the ones that go from state to state, or even the ones coming down from Canada, once they get into U.S. territories, believe it or not, these are governed by Department of Transportation. So that falls under their realm. So if you're not able to use a interstate or multi-state pipeline, your only other options are either by ship, by rail, or by truck. And you know, we're not on the coast, or you know, these fields are not on the coast, so the ship is taken out of it. So now it's either rail or truck. But even when you're doing it by rail, sometimes you have to travel by truck to get it to a rail load. So it's just
most
it's
times.
a cluster.
Yeah, most times you do. Right, you can't get it on a rail before you put it on a truck to get it to the rail. It doesn't drive itself.
No, and all these with his cutbacks on domestic oil production, and not only that, but exploration. One of the things that's kind of shocking me, if you look at Devon Energy, Schlumberger, and some of the other exploration companies, they're also up 5, 6, 7% each day. They're 3 to 7% over 2 days, which I find really counterintuitive.
I see what you mean, right? Like, do you think people are speculating, or you think the market is just dying to find somewhere to put its money?
So if I'm a Fortune 500 or close to it exploration company, I'm not going to stop exploring my gas reserves or whether it's shale or deep well or whatever it is, because the one thing we know for a fact that the only constant in the universe is change. So I think they see the writing on the wall that these midterms are going to be devastating for the Democrat, which can only help us as far as our domestic energy production. And then of course, when it comes down to the presidential election, I think they're pretty hopeful that it's going to swing back right and thus open up energy.
Speaking of energy, man, and I'm thinking of the base metals right now. How about that nickel squeeze, right?
That is crazy.
Nickel futures going up to $100,000 a ton.
Mm-hmm.
It's a symbol, it's a sign, a precursor, again, of things that are happening. It's like a boss fight in a video game. You don't take on the boss first and then play the game. You play the game and take on the boss last. So this little piddly shit that we're seeing with, energy and base metals and commodities is the precursor to the boss fight, the market crash, the short squeeze, financial collapse. Don't get me wrong.
To Cash's point, God, a month or two ago, he was saying the white metals, remember? It's
the white metals, yep.
Yeah, the white metals are the ones that are probably under duress from shorting. I don't know how much platinum and palladium are shorted, but it's because I'm not I'm not as up to date on metals as I am on energy. But I will say everything that he said thus far is pretty much come to light, because we're noticing now that silver and nickel now are heavily shorted and under duress. And I mean, maybe even yellow gold is being somewhat suppressed, but it's just not going to have the multiplier on possibility, right?
Yeah, nickel has gotten to $43,000 per ounce. Per ounce. This is where the people that say that the market cap doesn't support, the cost of AMC or GameStop going so high makes no sense. Because people don't tend to realize Nickel's at,
What did you say?
I said nickel's at $42,995 per ounce. That's up
Ounce.
per ounce. $13,220 increase today alone. And it's only 11:30 Central Time in the morning right now.
Wow, dude, that's insane.
Yeah, it is insane. It is absolutely crazy, you know. And when you look at it quite simply like this, like look at it on the day chart, it's straight fucking up. It's a parabolic movement. Nickel's been suspended. The futures markets on nickel has been suspended for quite a few days. I've got to look at it. It was just happened, so we're all just finding out about it. It's not like something that's been out for a while that I could just go pull up on any news source. It just happened moments ago. You can call it Trust Me Bro, or you can give it an hour or two and you'll see it all over the news.
You know, the other thing yesterday also that kind of shocked me is, I know at least Schwab, and I'm not sure if anybody else, they put a halt and flagged everybody that you couldn't buy like wheat and corn, and it was out of that Chicago Mercantile, I believe.
Mm-hmm.
But it was a carte blanche across the board. It was like those commodities were all put on hold, and I don't know what the hell's going on with it.
There you go. LME is forced to halt nickel trading and cancel deals after prices top $100,000 per ton for nickel in the London Metal Exchange. This was back in 2018, this photo, but it's just what's happening today, March 8th, 2022. LME forced to halt nickel trading and cancel deals after prices top $100,000. You believe that shit? So if anybody is going to tell me that AMC or GameStop or meme stocks or silver or gold can't squeeze, you know, the ridiculous numbers, come back and talk to me in a few weeks. And then we'll see who's fucking talking, who's laughing. Nickel just went up $13,000 per ounce today. Absolute insanity. You know, look at the long-term chart. Let's take a look at the max chart on it, so you guys can get a real indication of what we're looking at. Look at that. Look at where it was way back in the early 2000s. Let's see. Let's scroll down. Yep. Right around 04. 49,000 per ounce. Almost 50,000 per ounce for nickel. And right here from March 2008 through February 2009, it had a major collapse from 28,000 down to 9,700. Again, kind of mirroring what Silverback was just mentioning about the energy and then the energy prices, what happens to them before, during, and after a market collapse. It's probably, none of us are financial advisors, but it's probably pretty clear to see if you go and take a look at it for yourself. I don't know if we're moving off the petrodollar highway frog. I'm not sure. I would say that it's about time, but I'm not sure. What do you think?
Boss, let me just want to say something real quick, and that's $43,000 a ton.
No, it's $100,000 a ton. I'm sorry, I misspoke. Yeah, I misspoke. It's a ton. My bad. Excuse me. This is after.
That's all right.
Yeah. Sorry, I was like in the zone, so I did not even like think about what the hell unit of measurement I was using with all the conversions I was doing today. My apologies. But yeah, that's where we're at right this very minute, which is still ridiculous.
It's crazy off the chart.
So I apologize that I misspoke. I did say ounce, I meant ton. Iron ore and nickel prices compete for best in show. Let's go back. Aluminum's sitting at 3,740 per ton. Iron ore is at 158 per ton. Nickel at almost 43,000. And that was as of 9:26 a.m. I believe The only reason it's going to stay steady now is because LME has halted trading. It's their biggest crisis in decades. They're going to be closed for several days, and they've got big, long, short positions. Long and short positions, I should say. Sorry. Little one's not happy. Big, long, and big short positions have clashed. What did Peter Iffy tell us about the brokers that pulled the buy button? Long and short positions had clashed. Yeah. MNNW, I measure everything in ounces. Yeah. Maybe. Looks like Singhan Holding Group is holding short positions, and in case you don't know, I'm pretty sure they were margin called. This is a new revelation. Can anybody confirm that in the think tank? Yep, there it is. China's Xchange fires nickel rally as it cuts costly exposure. So they bought large amounts of nickel to reduce its short bets on the metal and its exposure to margin calls. They were given an extra 24 hours to meet margin calls because yesterday they failed to meet them. And so they were given an extra day because their margin is so fucked up that the bank doesn't want to have to eat the cost of covering China Xchange Holding Group's short positions in nickel. Yeah, my dog's got on guard as well. I said quiet. As soon as my daughter came in, my dogs stood up, and I let them out. I let her out, though, as well, because I keep it sealed off, because I do smoke in here. I don't smoke in the house. I do smoke in my office, though, so I keep it well ventilated. And don't let the kids in here. Moscow's invasion of Ukraine and the West moves to sanction Russia, which have already electrified a bullish nickel market. Prices doubled to a record above 100,000 per ton. That's crazy. And they're also raising nickel trading fees, so they're canceling trades, halting trading, because price gets to 100,000 per ton. And what do they blame it on? Short covering. Short covering. If you've been watching this channel at all or following on YouTube, Twitter or Reddit, LinkedIn, any of those, and you don't understand what's going on, it's a short squeeze. The whole market's a fucking short squeeze because of the overvaluations and the propping up of the S&P 500 and the NASDAQ and the Dow by the Federal Reserve through their use of their $9 trillion balance sheet and the printing of over $30 trillion in the period between 2008 and 2010 to bail out banks and governments worldwide with our shitty, useless fiat, which is unfortunately still king of the castle. Fortunately or unfortunately, you can call it whatever the fuck you want. But the petrodollar has got to change. That's a different story for a different live stream, I think. So, I hate to tell people this, but there's a lot of misunderstanding in the situation. None of us want these bad situations to happen, but we are powerless to stop them. None of us can go to Russia and ask Putin to pull his troops out. It's not going to happen. None of us can go to China and ask them not to invade Taiwan. It's just not possible. Let's see where we're at here. We've got a serious situation going on here. Like these price moves on nickel and other shorted stocks and oil, even while it was moving parabolically, they're exacerbated the pressures on the holders of these big short positions who are already facing calls to deposit the extra money, and they're with brokers, practice known as margin calls. And when a company like Xchange, and other shorts face like large margin calls on their short bets, the amount of money that they had to deposit to cover their exposure to falling and rising nickel prices is absolutely extravagant. Xingxan's bets on lower nickel prices had amounted to around 300,000 tons at an average price between 18,000 and 19,000 a ton. So let's just take off those zeros, and we'll just use the number 18. So let's just say that they've got 300 tons worth at $18 a share. They've got to now cover for their positions because the price is at $43 a share. So they're getting margin called on something so small as a run-up that's, only about 2 times the actual current share price. I think that should give you a little bit of an indication as to how bad things are going to be for other stocks that are even more heavily shorted. LME announced on Friday it was raising margin requirements for nickel contracts by 12.5%. So the margin requirement is increased by 12.5%, and the extra charge kicks in at the close of business today. But at $2,250 a ton, the capital required on the 300,000 tons of nickel for Xingchen would be almost $700 million. So one $700 million margin call is causing shit like this. In one day. Let's take a look here. There you go. That's the movement today before it was halted, or yesterday before it was halted. Let me switch over to the screen so you can see it. It's as simple as that. It doesn't matter what the short squeeze is. This is the everything squeeze. I love my stocks. I love AMC and GameStop, as well as, some other meme stocks out there that I feel very strongly about. But that doesn't mean that we have to be so close-minded to think that it's the only squeeze. People need to take advantage of the entire market, the market crash, the squeezes that are happening. And I'm not a financial advisor. All of that is extremely highly risky, and you are very likely to lose a lot of money. I'm okay with that. I'm okay with that because I think we all know where this is going in the end. If you really think about the due diligence, quite simply, a 300,000. The biggest crisis for London Metal Exchange is caused by only 300,000 tons worth of short positions by one Chinese holding group, Xingchen. That's it. The fuck do you think's going to happen to stocks like AMC and GameStop, BBIG, BBBY, CEI, OCGN, DWAC, Progenity? The list goes on. There's 100 meme stocks. Cost, I think it'll run a little bit. I think cost is one of those smaller meme stocks in the basket. I think I have owned some of it in the past. I don't recall exactly. I'm pretty sure I've had some calls on it, and I think I made some money. I can't remember every trade, but I'm fairly positive. And it's definitely had some parabolic movement in January and June of 2021, as well as in early of 2022, it had some decent short covering, it seemed like. But as we all know, this year, the amount of margin being used in AMC and GameStop is ever increasing, even though retail owns the majority of the float. Utilization is at 100% for AMC and GameStop most of the time as well. And unfortunately, here's the Bloomberg Food Price Index, and we're at all-time highs, sadly. Yeah, Joseph, you're right. We got this. It's just unfortunate that, many people out there are not going to be so, savvy or willing or have that risk appetite to be able to take on such an endeavor. And that's all right, but they're going to also have to deal with things like the highest food prices we've ever seen in our lifetimes and in most people's lifetimes, especially with inflation coming on and the issues that we've currently got going with oil, with Biden's banning of Russian oil and energy in the United States. It is going to cause diesel, jet fuel to skyrocket, as well as the cost of gas. I never thought we might actually see $10 a gallon at the pump, but that's very likely at this point. If oil gets to $200 a barrel, that would be about $15 per gallon. I know a lot of you noticed your fuel prices go up overnight, yesterday or the day before, 10, 20, 30, 40 cents. I know in places like LA right now, gas is over $6, $7, and it's actually happening. I'm sad to say. It's very bittersweet. These are failures to deliver by the United States Treasury. If you're unaware, I can't really make this much larger. So you're just going to have to see here that this bar is for February 28th, 2022, and it is the high that we haven't seen in a long time. It's higher than it's been in the entirety of this chart of the last 2 years, at $76.125 trillion. I'm sorry, $76.125 billion worth of failures to deliver alone by the U.S. Treasury. Why on February 28th? Because this T+2 data, which is reported on February 28th, actually occurred on February 26th. And on February 26th, the S&P 500, the SPY, had a 13% red candle. And in the same minute, the plunge protection team spent between $20 and $50 billion to sell naked shorts, puts on the VIX, the volatility index. This created a gamma ramp and a gamma squeeze on the SPY. It caused futures and volume traders to buy anything on the S&P or the SPY or positive equities other than short positions on the SPY because of the vast amount of puts that were sold naked by the Federal Reserve. I'm sorry, should I say by the U.S. Treasury as an unnamed buyer. The plunge protection team is the only entity in the world that can spend that amount of money and be named as an unnamed buyer on the United States stock markets. If it was a family office, it would have the name of the office. If it was a hedge fund, it would have the name of the hedge fund. If it was a bank, it would have the name of the bank. Nobody, except for the plunge protection team, can save the market and make a purchase or a sell order of $10 to $50 billion worth of naked shorts on the volatility index and be named as an unnamed buyer on the documentation, except for the plunge protection team, which is led by the one and only old Yeller, Janet Yellen. Who else sits on the board of the plunge protection team? Gary Gensler and Jerome Powell. Do you understand what this means? This means when the shorts on the VIX need to be covered, the S&P is going to fucking tank. It's going to fucking tank. Because there's billions and billions and billions, no, actually, I'm sorry, trillions of dollars worth of naked shorts and shorts that the inputs that the Fed owns on the VIX, the volatility index. And at some point, they need to close out those positions too. This is the everything squeeze. The VIX is going to squeeze. The S&P is going to dump. Precious metals are going to squeeze. Energy is going to squeeze and then dump. Fucking meme stocks are going to squeeze. And then God knows what the hell's going to happen to commodities and food. They're going to squeeze as well, unfortunately. I'm not a financial advisor. I don't have a crystal ball. None of this is financial advice. On that note, I wish everybody peace and wealth and good fucking luck. We're going to be so fucking rich. And it's really bittersweet.
Anything?
What's up, brother?
Something that kind of gone on. I mean, we have a lot of young people, and I think everybody in the think tank cares about people out there.
Yeah, there's no speculation on that sense. I think you're right. It's more cause and effect, you know, supply and demand and supply chain. So I believe that a lot of people don't understand what that really means. And what it means is that if oil prices go up and food prices go up, they're going to work in tandem and continue to push each other higher. Because the demand for food is still going to be there. And unfortunately, when food prices get to a certain point and oil prices get to a certain point, we're going to see even more stealing and looting than we currently are. And that will probably lead us to a situation where it does not help our economy even further. You know what? Dylan B just told me when I mute that people can't hear you talk either. I have no idea, Dylan. Thank you for saying that. Hey, brother, Eagle Eye, would you mind repeating that, please? Because I would rather it come from you instead of me just repeating what you said. Would you be able to repeat that so that these folks can hear what you said about that, about food and energy?
That was from somebody else, bro.
Sorry, dude. I thought it was you. Not sure who. Was it Sigma or Velchrome? I think.
It was.
Oh, okay, cool.
I was talking about or at least I think I was the person talking about just taking the mentality of gas going up in price, raising food prices along with inflation, not just not that they're both cause and effect.
Absolutely, absolutely right.
I got in on CI on that dollar drop there, baby.
How's it going? How's it doing right now?
Back up. About 30.
A surprise, right?
Yeah, they flashed olive oil. It looked like it was one oak went down.
If you look at the 1 year chart, you can see that CEI ran hard for several days here. You know, in September of 2021, you know, 70 cents, 83, 99, $1.30, $1.52, went down a little bit and then kept going. $1.64, $1.72, and then dipped again. And then it made its real run from $1.46 to $1.90, $2, $2.72, $3.22, $3.42, and $3.82 before collapsing back down to $1.50. So I believe personally that this is the beginning of a similar movement like we saw here, and that's why I also hopped into CEI. But again, this is not financial advice. Camber Energy could be facing another short squeeze situation like they did back in 2021. You know, and this is not really I don't think that this has anything directly to do with like meme stocks, for example, or running with or against them. It's a separate movement, mainly because it's in the energy sector, whereas the meme stocks are not as affected by things such as bans on Russian oil. All right, so I believe this to be the beginning of another movement. I could be completely wrong, but that's where I'm putting my money where my mouth is as well, as usual. But yeah, we had a pretty healthy movement. Back on March 4th, it was at 56 cents, up to 171, back down to $1.02, and it seems to be moving right now. It's at about $1.28. It's up 93% in the last 5 days. Over here, at some point on the 5-year chart, people keep asking me why the price was so expensive, and I don't know exactly, but I would speculate that it was at this price before a stock split, and then after a stock split, multiple stock splits, it reduced in value. I could be wrong, but I believe that that's what the case was. If anybody knows, drop it in the chat or jump in and correct me, and I'll also correct that. Egyptian credit default swaps are up 178%. A lot of people don't understand what credit default swaps are. They're a hedge for mortgage-backed securities. Institutions buy credit default swaps, CDS, in order to hedge for you or your people in your area not paying their mortgages, and these mortgage-backed securities collapsing because of people being foreclosed upon, or homes being sold because people can't afford them. They're sold short, short sale. My little one's knocking on the door. I'll be right back. Hey, what's up? Come here. Yeah, so this is the cost to insure, credit default swaps right here. It's at an all-time high, $1,672 on average, from a low on September 15th, 2021 of $75. From $75 to $1,672. For Russian credit default swaps, which hedge against mortgage-backed securities in Russia. Egyptian credit default swaps, as you can see, this movement straight up right here in one day went up $586, which is a 178% movement. And on 3/7/2022, it was at $914. So pretty crazy. Regarding CEI, CEI traded 2 times of its entire free float in one day. Thanks to my guy Edward Britchick on Twitter for sharing this information. But yeah, yesterday I took a look. The volume was 437 million, but the free float's only 247 million. Now, I don't know how many retailers sold the float, even though the difference between this and AMC and GameStop is that institutions own the float on CEI, and I'm okay with that. And even still, it's running many percent, hundreds of percents, and thousands of percents sometimes. And the free float is being traded in its entirety 2 times in one day. Are you telling me that everybody that owns a share traded their shares, bought and sold twice in one day? That doesn't sound logical, does it? The only logical conclusion would be naked shorts, synthetic shares, married puts, divorced puts, ISDA contracts, futures, equities, total return swaps being used to manipulate these. ISMA contracts. It's not just ISDA, there's also ISMA contracts. People are very unaware as to the real intricacies of what's happening in the stock market and why, meme stocks and OTC stocks are running in this sort of effect. And I think that the people that have taken the time to do their due diligence and really think about it realize that it's a short squeeze play, that a lot of things are. Thanks, Jam Bam, again, Jamie, for posting. Biden is set to sign an executive order this week directing federal agencies to examine the potential regulation of crypto, like Bitcoin. Federal regulation on Bitcoin is incoming, and I have no idea what it's going to do to the crypto markets, but I highly doubt that they're going to go upwards in the short term. I highly doubt it. And one last thing. For those of you that were unaware, effective March 5th and until further notice, Charles Schwab, amongst other brokers, have pulled the buy button on corn, Chicago wheat, Kansas City wheat options. They're only closing trades for those options, and you're going to have to contact, your future support phone number for any help on that end. If you happen to hold any futures options or trade futures for corn, wheat, Chicago wheat, or Kansas City wheat. That's fucked up. That's fucked up.
Hey, CEI boss has already traded 600 million
Today? So almost
Yep.
3 times its fucking float. Gee, guys, I wonder how it got brought back down.
And it looks like they shorted all oil stocks at the same time. I posted an
I think you're right. Yeah, did you post it? Man, that's awesome, because I noticed like USO and WTI and everything just started coming downwards. I thought that was really interesting.
They know they're fucked.
Yeah, they are. Beast Mode says, my boss still doesn't believe me on this shit. That's all right, man. Your boss is going to miss out, not you, right? The $41 billion fiasco by Russia and the credit default swaps. Well, well, well. Yeah, I'm tired of people saying we need volume. That's not really what it's about. It's not all about volume. We need people to trade on lit exchanges, on lit markets, where price discovery actually makes a difference, where your purchases and sells actually increase or decrease the price of your stocks. Trading on Robinhood and Webull is for fucking beginners and people that don't give a fuck about their stock. And I think anybody that does care about the future of their stocks should trade on lit markets. But again, I'm not a financial advisor, and to each his own. I can't speak for anybody else. Yeah, look at that. Continental, APA, and Oniok running opposite of AstraZeneca. That's an interesting movement. So why are they dumping when Biden is calling for a ban on Russian oil? They're United States companies, not Russian oil companies. That's an interesting movement right there that I think we're going to watch more into the end of the day and into tomorrow. Let's take a look at Bitcoin. How are we doing here? According to your TA rejected star, it looks like it is topping out. It's hanging out. 37.9. And McDonald's is closing 850 restaurants in Russia. That's fucking crazy, isn't it? They say temporarily, but who knows for sure. What emotion is driving the market right now? Extreme fear. No shit. Oh yeah, thanks to my man Ryan Rigg, Wolf of My Street, for pulling up the latest daily U.S. Treasury and agency fails. But yeah, taking a peek at this data, again, here's February 28th. 2 days later, 2 days after the 26th, naked shorting of the VIX by the Federal Reserve and the plunge protection team through the use of the New York Fed and the ESF taxpayer money that belonged to us at one point that we were paying for. They spent billions and billions of dollars, and then we're left with over $76.12 billion in failures to deliver on the 26th, which was reported on February 28th, 2022. And this is aggregate data, so they paid some off here and got it down to 27. But again, it jumped back up to 40, down to 32, and back up to $47.8 billion in Treasury failures to deliver, as well as, over $500 million, $635 million in agency, in agency failures to deliver. Oh, crazy. Hello. And just in case you didn't see it, this will be the last thing that I will show you, because my little one's out there yelling and I want to go see her and spend some time with my kids, get some work done. This is the actual photo of the SPY at the very moment that this occurred. I'll be right out, hon. The SPY was at 429 and dropped all the way down to 364 with 68 cents. That was a massive, almost 14% drop in 1 minute candle. The ESF, the plunge protection team, used the ESF to sell $50 billion worth of puts or more on the VIX in order to create a gamma ramp on the SPY and the SPX. That caused an immediate buyback within moments and brought it back down from 364 up to 439.95 for the day. This is where your taxpayer dollars are going, to deceive people worldwide into making them think that our stock market is strong, is going to continue in an upwards trajectory. And it's really a fucking shame, and it's going to be really bittersweet when we are filthy, stinking fucking rich and the vast majority of people are getting, destroyed by inflation and loss of jobs and wages and the cost of goods. So again, on that one, I'll just say, just don't fucking dance. Let's make sure we do right by our community. You don't want to, in my opinion, give handouts. You'd be better off by creating jobs and paying people well and giving them good benefits. I wish you all peace and wealth. Thank you, everybody, for your support. Have a great rest of your day. I'll see you again tomorrow. I'll be back on tomorrow for another stream. Peace out, everybody. Thanks again. Have a wonderful day. Oh, and if you're still listening, yeah, I do think that the bullshit on the SPY that's happening right now is a artificial pump. But who the fuck knows, right?
Right. No, I think you're nuts on. I think it's absolutely another PPP shit. I was a little disappointed though. I heard your youngest one in the background crying, and I could have sworn it was Kenny.
I wish it was. Pretty soon it will be. Somebody will film it. It'll be fucking hilarious.